All right, guys, here we go. In this video, we're going to explain our thesis for a potential $3,000 gold per ounce in 2023. And it's pretty much going to take a perfect storm for that to happen. And we think it's setting up with the dollar, the US dollar currency index, the DXY. Here we're looking at the daily chart. Each candle is 1 day of price action. We're in this descending wedge. A lot of times price will either trade sideways, build a base support, then breakout, or breakout with very strong, obviously green bullish engulfing candles. But right now, as we're seeing it, we have a little bit of, or the dollar has a little bit of overhead resistance, actually quite a bit. As this red dashed line, you can see the high and low pivots in the sideways consolidation. That's going to be hard to get over unless the Fed, comes in to rescue the day. And then we have the 20 coming down, already crossing under the 200. And of course, the 200 is going to be a little bit of an issue as well. So there's only two ways this thing's going to move. Okay, now there's sideways consolidation, which is accumulation of the big boys and then they break it out, or distribution of the big boys and we're selling to the retail crowd right before they drop it. And then the other two ways, and this is what I'm expecting the M formation, down, up, down. And then, of course, you got to be always think like a criminal. They could run it up. The Fed step in and support the dollar, up, down, up, and then you have your W formation. And let me show you how that looks on here. We come up, down, come up into all this resistance zone, then the dollar falls. Okay, and we're unable to take out that high pivot. That's really the secret. Getting over 106. We do that, then it might be a tough, first, second quarter, whatever of 2023. But what we want to do is come back and take out that low pivot here, come down into that psychological 100. But I believe, this go dash line, that's a significant uh, price level on the charts. But anyway, we start trading under it, especially if you start closing weekly, monthly candle under that. That could be the, last straw for the dollar. For the, we get further real strong downside, and some people are going to think I'm crazy, but we're looking at high 80s. Once we get, low 90s, high 80s, we could hit uh, next year pretty easily, actually. But anyway, let's talk about gold. And right here, this is the daily chart, and as you see, and once we go to the monthly chart, you'll see how significant this gold dash line is on the monthly chart. But right this second, we're in sideways consolidation. And like we talked about before, sideways consolidation is either accumulation by big money for a potential move to the upside, or distribution selling all of that for a big move to the downside. So, with what all's going on in the world right now, and the way things are looking, and a potentially weaker dollar, you got to put your bets where you think it's gonna, what they're gonna do, with that sideways consolidation zone. But here's some monthly chart. This is what we really want to talk about. We've been in this old school, guys. We call it fry pan bottom. We're now forming, like a cup and handle here off that fry pan bottom because it was a failed breakout. So we've come back in here. And so anyway, the measured move, as you can see, was 67. And you put that here for the breakout. Even over here, we what will get the party started near term will be for gold to break out over that high pivot right here. And let's see exactly, instead of just guessing, let me see that on there. Okay, about 1900, 50 bucks, 1950. Let's see, yeah, I need to trying to put that perfectly on there. But that's what we're looking at right now for this handle as we've consolidated in here, breakout. we got to break out, on this down over this down trend line plus that high pivot to really get it moving. So yeah, 1900 better be over 2000 would even be, obviously uh, more uh, as a strong, confident determination that we're going to make it up there, with that breakout. Because as you can see, we had a few failed breakouts here, so that's why that blue dash line. Let me make that a little smaller there to pinpoint that price. But yeah, I think it's more, sooner than later. So we have the whole year to look at 2023. As exciting and crazy and wild as 2022 has been, I don't think we've seen anything yet. And then also, a little off topic, we still have the home builders, real estate, where are they going to bottom? Because normally, stocks will bottom, start consolidating, and slowly start moving, up again. And then real estate begins to start bottoming and consolidating and then moving up. So we could be in for a little bit of a ride there. And regarding crypto, our anticipation is into first quarter, second quarter, Bitcoin to start, consolidating, hitting its bottom if we have not already, and then moving up like we always do into the next halving. Now, if they bring it down to 10,000, no big deal. I think that would take another crypto exchange fallout or a stable coin fallout if you're following what I'm saying. And then, we could see that 10K move. And even from there, we're looking, Bitcoin always does, 15 plus X after the bottom. So that puts us, 130, 150 Bitcoin, which I'm sure everybody can live with. But okay, guys, uh, thank you for watching. Give us a follow on Twitter, and we will see you on the charts.